Hello and welcome everyone to our session today, which is called Ready, Set, TASA. Speaking of Tanya and our wonderful instructors, let me introduce her to all of you. So Tanya is a highly experienced business advisor and trainer providing training and support to SMEs and accountants. She's well-versed in tax, financial reporting, risk management, ethics issues, basically is good at everything. So everyone please give a warm welcome to Tanya today. Yay! How are you, Tanya?
I'm well, thanks. How are you, Vicky?
I'm good. I'm so glad it's Friday. It's been a long week, even though we had a day off on the Monday, but
Yeah.
we got there.
Well, yeah, I forgot it's a short week. I've been so excited to come here and talk about TASA today. So yeah, I forgot all about it. But hello, everyone. And it's really great to be here to chat with you. As you can see, as we move across to the agenda today, we've got a fair bit to get through. I've put a lot in here, but at the same time, I've tried to keep everything streamlined and have a recap at the end to make things easy for you to help you get across, the changes and also have a bit of a game plan by the end of this session in terms of how you'll approach, either checking off on a couple of items that you've not yet completed or whether it be, sitting down to get it done and belt it out in one go. So I'll do my best to get through all the questions. I imagine there will be a few, but I've built in a lot of information into the slides. So hopefully we'll cover that as well. And also, as Vicky said, we may have a follow-up FAQ if there's a lot that everyone wants to discuss. I'd be happy to continue the discussion. So to get to know who's in the room, I just wanted to ask, and also just to get to know how you're feeling and how I can sort of help convey this information. I'd like to know how you're feeling about the upcoming, already in place for some of them, TASA and the code changes. How have you been going with implementing things in your practice? How are you feeling about the changes? So you can access the Slido through the link in the chat or the QR code on the screen.
Awesome. So yeah, keen to hear what people think or are feeling. So this one's a multi-choice question, so you can actually pick multiple ones. So you can say, yeah, you're ready. Well, why are you here at this webinar? If you're totally ready, but maybe you just want to recap. So that's the first option. Second option, yes, you already know what to do. It's just a matter of, getting it done maybe. Number 3, working on it, which is good. We still got 2-ish, nearly 3 weeks, 2.5 weeks left. So we still got a bit of time. The changes make sense. Again, it's just a matter of sitting down. It's on your to-do list. It sounds a bit daunting, which it can be, I think, just because there are a lot of different changes that were coming in at different times. Might be a bit overwhelming. Hopefully, our session today will give you a bit of peace and a very clear path on what to do. Or if you're, again, not sure on where to start, hopefully after today's webinar as well, you'll have a clearer picture on what to do, what you might not need to do, and that will give you a bit of organization. So yeah, thanks everyone for joining in. Let's see what people think.
Excellent. So it looks like a lot of you are onto it, and for others, it's on the radar. And if you don't know where to start, we'll have a starting point today in a discussion around the background and the context. And I absolutely understand and appreciate and empathize that it does sound daunting. But hopefully I've tried to put it in a logical order and streamline it for you. So we'll get started. Okay, excellent. Thanks for sharing that, guys. It does help in terms of, what's on everyone's mind. So we'll start off with a bit of background only because context is important, and it might even help alleviate some concerns that you would have about how these rules are going to be sort of administered by the TPB. So we'll go all the way back to 2009 when the TASA came in, and the TASA established the Tax Practitioners Board and provided for the registration and regulation of tax and BAS agents. And then in around 2019, as part of a post-implementation review, the government had some recommendations coming out of this review, which was to be, it was, all very agreeable. There was nothing too controversial in. And one of those was that the minister should be given the ability to supplement the code just to keep it contemporary and modern and respond to issues as they arise. And things were ticking along pretty well from there until around 2022. I think we first heard of the government leaks matter involving a particular one tax practitioner in particular. And so that seemed to be the catalyst for some further changes, some in direct response to that matter, which were then built into the TASA as well. and the amending act to the TASA received royal assent on the 27th of November. So following that, or around the same time, the minister issued a draft of the first ministerial determination issued under the changes to the Tax Agent Services Act. That was open for consultation for a period of time, and then a determination was initially registered on the 2nd of July. There was a lot of pushback and submissions and a lot of discussion around two of the items in particular, along with the start date, and we'll talk about those items today. And then on the 31st of July, sort of like the day before the initial proposed start date, the minister kindly said, okay, we'll look at some transitional provisions. And that's what you see in the revised determination, which was registered on the 9th of October, along with a lot of clarification came out on two of the items that did cause a bit of concern. And some of your member bodies, our member bodies, submitted papers and commentary around that, which has been picked up. And so we are now dealing with a better version than what was originally registered. So that brings us to the background. And so as long as you know that a lot of these changes are consistent with what we see in code items in APES 110, APES 220, also in terms of some of the existing code items in the Tax Agent Services Act, but then some of them are in direct response to incidents that we've seen and are intended to target those higher risk matters and not necessarily your everyday practitioner. So in terms of the key changes, what are they? First of all, expanding the Code of Professional Conduct to include two additional items. We'll talk about those specifically. Breach reporting obligations, which are already in play. Changing to an annual registration period from a 3-year registration period. Extending whistleblower protections to mean that the TPB and the ATO can receive whistleblower reports. Eligible whistleblowers will be protected, and we'll talk about what is an eligible whistleblower. An extended investigation period for the TPB from 6 to 24 months, and giving the minister the ability to expand the code, which is where we saw the ministerial determination arise. So this slide in particular has embedded links, as do many of the slides in today's presentation, because each of these in itself could almost be a separate webinar. So this gives you the ability to jump in and see the detail if you wish to do so. And we'll also talk about these in a little bit of further detail as we go through the presentation. So just keep in mind that once you get the slide deck, if you haven't already, you'll be able to expand on those links for further information. So in terms of dates, the ability for the minister to expand the code was granted on the 1st of January, or effective from the 1st of January 2024. So we saw that ministerial determination come in. Breach reporting came in on 1 July 2024. So any breaches arising on or after this date, registered tax practitioners now do have the obligation to report. We'll talk about that. The annual registration period will come about or arise for periods due for renewal or registrations due for renewal after 1 July 2024. Whistleblower protections or extended whistleblower protections are in place from 1 July 2024, as is the extended investigation period for the TPB. And the first one was expanding the code for the two items. And lastly, the minister's ability to expand the code is also 1 January 2024. The ministerial determination that was issued under the minister's ability to expand the code was registered on the 9th of October and has staggered transitional start dates. The first one for those practices with greater than 100 employees came in on 1 January 2025. And now, as we know, for those with 100 or less employees will come in on the 1st of July. So which is why today's timely, but also which is why I can see that so many of you already had it on your to-do list, because these have been in the pipeline for some time, but there's nothing like an impending deadline, but certainly for me, to get the job done. So, that's that sort of added motivation. All right, let's start talking about each of these items. So the first is expanding the Code of Professional Conduct. And the minister, this is not the ministerial determination, expanding the Code of Professional Conduct under the TASA. So this was made, or these two additional code items were added with Treasury Laws Amendment Bill don't have the exact number of it. I have it in my notes somewhere, but it was through a Treasury Law Amendment Bill as opposed to the determination. And these two items relate to the use of disqualified entities. So item 15 is you must not employ or use the services of a disqualified entity to provide tax agent services on your behalf without TBP approval. So you can proceed with engaging or using the services of a disqualified entity, but you do need to seek additional permission. Furthermore, you also need to seek permission of the disqualified entity to make inquiries. So linked in this slide is the fact sheet guiding you through what to do if you are facing, having to engage with a disqualified entity. And the approval link takes you to the approval form that you need to have signed by the disqualified entity if you are seeking TBP approval, and sharing their details as part of that approval process. So that covers you off on those two fronts there. As we go through each of these changes, you'll see links and you'll see forms, and these can be embedded into your quality systems management procedures. And we'll have a recap on this at the end of the session, but this is just something to keep in mind. So these changes and how they impact your firm can be woven through in terms of however you track this process. So if you are engaging an entity, and by entity, that can extend to an employee, an associate, a contractor, an individual, or any entity who share in the revenue and income received from the agent services provided by the tax practitioner. So it's quite a broad net, and therefore ensuring that you have a mechanism to catch that and conduct this check is going to be important in your practice and the way you administer or deliver your services. Item 16 follows on from item 15, just to cover all, and it says you must not provide tax agent services in connection with an arrangement with an entity that is a disqualified entity. So that might be where you are using the services of a disqualified entity, and that could include even providing a schedule or providing some insight or advice as part of the broader services that you provide. So that's what we mean by in connection with. So I think that's pretty self-explanatory, hopefully. In terms of, yes, absolutely. In connection could be services for a fee. So any individual that is connected with the provision of services. So it is quite broad. And it's just ensuring that at every layer of the provision of the services, there's that integrity. And if an entity is a disqualified entity, there's a reason for that, and making sure that you could still proceed, but that the TTB is aware of that and their level of involvement, and then can grant approval. I think in addition to that, it's just worth knowing that some of the reasons you might be a disqualified entity could include having a sanction or a caution from the TPB, and the caution would be on the lower end of the sanctions that the TPB could impose, which then may make it a reasonable case to actually seek approval, because the reasons for that written caution might have been appropriately dealt with and is no longer a concern. So it's have a look in the information sheet, and it is quite a broad list. I'll put that in the chat actually, so you can see. So you can see there that's some guidance on using disqualified entities, and you can see in the table 1 in that information sheet what type of a entity, and by entity I mean individual, contractor, employee, etc., would fall under those rules. All right, so moving on to breach reporting. And for significant breaches of the code, a tax practitioner has an obligation to notify the TPB as well as the relevant applicable registered professional body. So that has to be made within 30 days of the practitioner becoming aware of the breach. And there's a few hurdles that you do have to pass. It's not any sort of transgression of the code. It needs to be a significant breach of the code. Furthermore, it's a breach that relates, and there's 2 mechanisms for breach reporting. One is in relation to your own conduct, and one is in relation to the conduct of another tax practitioner. And you might think, well, why would I report myself? But as you may be familiar, voluntary reporting or self-breach reporting would definitely be taken into account should a matter be uncovered through ATO or other investigation and you have been proactive and self-reported, the TPB has come out in these information sheets and said that they will absolutely take that into account when imposing sanctions or considering the way forward. So you not only need to have a significant breach, but you need also to have reasonable grounds to believe a significant breach has occurred. And that will really, prohibit or deter any false or vexatious claims. So what do we mean by significant breach? We're talking about an indictable offence or an offence involving dishonesty, breaches that result or are likely to result in a material loss or damage to another entity, and other breaches considering the number and the frequency of similar breaches. So in the ATO fact sheets, in the TBB fact sheets, we're seeing examples where there may have been an instance where a tax practitioner didn't pass on a refund in a timely manner. They were late with lodgement. Communication with the client was very sort of vague and not very clear regarding the reason for the delay in the refund. In that instance, the tax practitioner who was aware of the delayed refund and the lack of communication sort of noted it, documented it, raised it as a concern to themselves, said, file note, okay, I'm not going to raise this as a breach, until it transpired over a number of other clients repeatedly and they weren't getting their refund in a complete or timely manner. And through the frequency and the nature and the impact on clients, decided to report it in this hypothetical case study example, which is then when you see in aggregate, it does become significant. There's no dollar value or threshold there. It's really considering these various factors. Or breaches prescribed by the tax agent services regulations. None at this stage have been prescribed, but something to keep an eye out for in case there's something's very specifically prescribed there. So in terms of the, clarification here, indictable offence would include theft, stealing, money laundering, corruption, embezzlement. You'll know if it's one of those. So this was one of the areas I think where you can see there's clarification in terms of what is a significant breach. In terms of should you have been found that there was a breach that you were aware of and you didn't report, it in itself would affect your compliance with the code and your standing as a fit and proper person for the purposes of tax agent registration requirements. Having said that, though, there are many examples in the information sheet and by information sheet, I'm referring to what is effectively a ruling from the Tax Practitioners Board, and I've linked those in the slides as well. So there's an example where there's a practitioner who suspects there may be a breach, doesn't have enough information to conclude. Turns out that practitioner was found to be undertaking dealings that resulted in significant amendments by the ATO. That practitioner wasn't found in breach of their obligations because they acted in good faith and they documented their reasons for not proceeding. They weren't sure, they didn't have enough reasonable grounds and they didn't proceed. But the main thing, if you do not report or you do not feel there is enough reasonable grounds or significant breach to report, is that you document your position. And, in terms of what can be considered significant is based on the information you have on hand. Time you can't retrospectively say, well, in light of all these other events, you should have known. So the key to this is if you are unsure to document. The other point is if you do feel you are in hot water, seek legal advice because this is an obligation we do have on us. And, I think this is law and this is here. And I acknowledge that some people do find it a little unfair or a little tricky. There are some who might say, well, with great power and recognition and big bucks comes great responsibility. So we do need to be across these and seek advice where we do find ourselves entering these waters. In terms of what's come about so far, information that came out this morning, so I had to quickly update the slide deck. As of the 6th of June, the TPB, or the chair of the TPB announced that they've received a total of 83 breach reports. So the floodgates didn't open in a massive way. Out of these 83, 64 were made by another registered practitioner and 19 were self-reported breaches. So that's interesting to see. Of these 83 reports, 8 are under review. Sorry, just snuck a peek at the comments. 24 had been escalated for further review or investigation. And Peter McCure talks about a triage process that they go through when they receive this information. And 38 required no further action. Finally, 3 led to the issue of a nudge letter. So that's sort of an encouragement to comply and, hey, do you just want to check in on what you're doing? Do you think it's the right thing? So you can see a range of actions there, and it really, I guess, comes down to there being that, and also there were no vexatious or malicious claims made at all, which is encouraging, and that's good to see. All right, so moving on to these 3 items, which I've aggregated together because they're not super controversial, other than a little bit of information that came out this morning. But the annual registration period, formerly 3 years, will apply to renewals and applications from 1 July 2024. The whistleblower protections have been extended to those who wish to disclose alleged misconduct to the Tax Practitioners Board or the ATO. Just on the whistleblower protections, again, as part of this interview, Peter DeCure, the chair of the TPB, has advised that the TPB has received a total of 1,111 complaints under the whistleblower protection, purported to sort of seeking to be made under whistleblower protection, of which, and this is where the information has just come out, so this is what I have at the moment, 601 were qualified for disclosure. And I read that to be based on the type of information that's protected when it's disclosed by an eligible whistleblower, and that's predominantly to assist the TPB performing its duties under the TASA or the ATO under the taxation laws. And 106 had an eligible relationship. And that's really important. And I think the proportion of complaints to those who had an eligible relationship then prompted this further comment to say that you really want to make sure if you are making reports under the whistleblower protections, you just want to be across the definition of what is an eligible whistleblower. And that's you need to be an officer, including a director of the entity, an employee, an individual who supplies goods or services, which would include a registered tax or BAS agent, an associate, a spouse, child, or dependent of an individual referred to above, or an individual prescribed under the regulations. So I don't know the size of the firms against whom these reports were made, and I don't also know yet the mix of these reports and whether they've been in relation to false or misleading reports, the client dob-in provisions, which we'll look at, or whether it's been, a contravention of, any other sort of aspect of the code. So, I'll be watching that, and certainly in the next quarterly ethics update, I'll hopefully have some more details or light to shed on that. But that's definitely something that I'm watching and keeping an eye out for you guys. So that's sort of what we know of so far. In terms of the extended investigation period, that's moved from 6 to 24 months, starting from 1 July 2024, and also backed up by the recent budget announcement that's allocated greater surplus of amount of funds to the TPB to manage high-risk cases. Okay, yes, these changes do include reporting clients, the breach reporting. So breach reporting is self-reporting or reporting another practitioner who has breached the code of conduct. And then we have the false and misleading statements, which may, and I say may because there's quite a few hurdles you have to jump over to actually get to that point. The client's provisions will be coming up shortly, so stay tuned. All right, giving the minister the ability to expand the code. Now, that's just a little one tucked away there at the end of their slides here. But wait, there's more. Buy one, get 8 free, basically, with that. So let's have a look. In terms of the code determination, this was, the code was amended not via the legislative or the ministerial determination is an instrument in and of itself that is law. And the first one is to uphold and promote the ethical standards of the tax profession. And this one is sort of like the vibe. It's overarching. It ultimately sort of the tax agent's responsibility to uphold the code. So I'm talking to this one only because it ties into some others that we'll go through later on today, and in particular 6 and 7, which in and of themselves are not super controversial. But 6 being, we'll get to 6. How about we just get to them and I'll talk to them as we go through, because you can't see them yet. So number 2, address false and misleading statements. That's the one that can sort of lean into clients, and we'll come back to that with its slides of its own. Managing conflicts of interest when undertaking activities for government and maintaining confidentiality in dealings with government. This one is in direct response to the government leaks matter and is not going to apply directly to most practitioners unless they are involved in those types of consultation activities. So yeah, again, but I have linked, as you can see, these have links to each of the individual information sheets should these apply to you and you want to get more detail. Keeping proper client records, which I think most of us would be doing anyway. Ensuring tax agent services are provided on your behalf. Ensure that tax agent services provided on your behalf are provided competently. And this is the one that I wanted to link to item number 1. And it's that overarching tax agents do have the responsibility to ensure services that are provided on their behalf are provided competently. And in the information sheets, that extends to in line with the code or provided in accordance with the code. So this is where, when we go through the documentation and how does this impact our firm on a day-to-day basis, where we are engaging staff to provide services on our behalf, and this can be registered or unregistered staff members, we need to make sure that they are across these code requirements too, because it's one thing for the practitioner to be across these requirements, but we want those closer to the information and closer to the client-facing dealings or the detail to understand where they may be coming across a false or misleading statement or a potential breach, and how that should be handled within the practice and how you'd like that to be dealt with. So we want to equip and enable our staff to make sure they are well-versed in that regard. 6 also ties into 7. If we want to ensure tax agent services are provided competently, we want to have quality management systems in place to support the delivery of those services and provide guidance and policy. So that's where number 7 is. Number 7 actually ties into or duplicates or runs parallel with what we already know to be our responsibilities under APES 320, for example, quality management systems. So hopefully, number 7 is going to be our launching pad for the rest of the changes that we need to make because of the changes to the code and the TASA. And number 8, keeping clients informed. And this is the second item that was amended between the initial and the subsequent amending determinations, because initially there was the concern that it could be so broad, but that's been narrowed down, and it also has its own set of slides for us to discuss. All right, so question for you. What is the size of your practice? And this is relevant because of the different transitional start dates. So please let me know. You can answer this using the link in the chat. So you can click on that and select your response, or you can scan the QR code and let me know. Or in the chat, yeah, whatever you like. Excellent. And this is important for me because then when I'm talking about the changes, I can make them as practical and as relevant to you as possible in terms of documentation. Excellent. So are you running the show? 2 to 25, 25 to 50, 50 to 100, 100 plus, 200 plus. So let's have a look. Most in the room are sole practitioners or 2 to 25. We don't have any above 100. One big firm-ish. Okay, fantastic. That's good to know because the key dates are driven based on the number of employees as at the 31st of July, 2024. All right, so you can't make changes now to sort of change your start date. Anyway, it doesn't matter. It's coming. So 1 July, it's here very soon. 1 July 2025 for practitioners with 100 or fewer employees as of the 31st of July 2024. 1 July 2025 for new practitioners with 100 or fewer, or who registered between 1 August 2024 and 30 June 2025, and 1 January for all other tax practitioners. So moving on to address false or misleading statements. This is one of the areas where when this first came out, members had a concern that this could mean any matter, including the physical or mental health of a practitioner. And due to the consultation and the feedback, this is one of the areas that was amended. So by employees, we mean employees in the ordinary sense of the word. So legally, yeah, so not necessarily just tax employees. So this was amended to be more specific. And that was where I think we have landed with a much better version of addressing false. Oh, sorry, that's keeping clients informed. Addressing false or misleading statements wasn't clear in terms of what would be considered a false or misleading statement, I should say. It wasn't addressed. And then subsequently, we've got this criterion now. And as you can see, it is a pretty, there's quite a few hurdles that need to be jumped over. So let's have a look. Do you have to report a client? Which is ultimately the question that we're all asking. Do I have to dob in a client? It's a lot of ifs and buts. Okay, so let's have a look. It applies where a tax practitioner has made a statement and all of the following apply. So first of all, there has to be a statement that's been given to the ATO or the tax practitioners board. And I should say, before we even get to this, it makes sense that there is an item that says you should not even make false or misleading statements to the ATO or the TPB, right? So that's a given. And I think that's already embedded in the code in terms of acting with honesty and integrity. So this is where I say that a lot of these are duplicated and really for the avoidance of doubt. But let's just say that that wasn't clear. So number one, don't make a false or misleading statement. Number two, if that has happened and a statement has been made to the ATO or the TPB, number one, there has to be reasonable grounds to believe the statement was false or misleading. False or misleading can include an omission. Have you advised the client that the statement must be corrected and you've informed them of the potential consequences of what may happen if they don't correct it? Are you satisfied that the client has not corrected the statement or explained the basis for it? And do you have grounds to believe the statement resulted from recklessness or intentional disregard of the law? At this point, just before we get to the last bullet point, even if it is not going to cause substantial harm, you do need to withdraw your services. And again, that's consistent with other requirements. It's probably good business practice. Do you want to continue working with a client where you say, hey, this is not correct, we need to fix it? And they say, yeah, no, don't want to do that. So I think number one, you probably don't want to be working with clients who take that approach and disregard your recommendations in terms of upholding the law or abiding by the law. But then the last bullet point is what triggers the report, which is, do you have grounds to believe the client's actions may cause substantial harm to others, investors, creditors, employees, or the public? And that can be financial, trust in the tax system, and it can be quite broad. Okay, so as you can see, this is not just, oh, that's Ren, I have to report. You have an opportunity to engage with your client, have the statement corrected, which is the better outcome. And then after a reasonable period of time, if you don't think that they are going to correct it and you think the action has the potential to cause substantial harm, that's when you have to report. Reasonable period of time can depend on the complexity of the matter, whether your client is around, if they're overseas, can you communicate with them when the original statement was made and your ability to obtain the correct information, so on and so forth. In terms of how to report, the ATO now has a link on its website, as does the TPB, if you wish to report to them as well. And as I said, this is maybe where we're seeing some of those whistleblower reports being made, but I'll be very keen to find out more about that and certainly will let you know as that information becomes available. So the next one, ensure quality management systems are in place. Now, this one is, I think, pretty important in terms of being able to launch from what you've got already and embed this into your practice. So all staff are aware of these obligations and you just don't want it to be something that, you're aware of, but your staff can't actually put the feelers out and uphold those obligations or keep an eye out for you. And what I'll link in a couple of slides' time is that the CANZ, CPA Australia, and the IPA have templates available for members to comply with APES 320 quality management for firms. That is in the process of being updated depending on which membership body you're with. But I think for now, we just need to make sure that we still have compliance with the TASA and the code obligations. And then you'll see membership bodies rolling out the updated templates over time. Some of them are already there. So practitioners might need to consider these existing policies and then put to the TASA requirements, which is what I'm going to do in a second, at a conceptual level. And then what that means for each firm and each practice will come down to how you've currently documented your policies and procedures and how and where you want to sort of document these changes. The last code determination item is keeping clients informed. And this is the one that I mentioned, which was what I had in my head when I was talking to you earlier, where people were concerned that that could include any matter being the mental or physical health of a practitioner. This is the one. And now that has been very, very much narrowed down. You absolutely don't need to tell a practitioner about, any personal matters, but you do need to let them know the following: that the Tax Practitioners Board has a register of tax agents, and you need to let clients know how they can tax and BAS agents and how they can access it. You need to provide information to them on how to make a complaint, about the rights and responsibilities of the practitioner and the client, what obligations clients have to their tax practitioner, and details of any prescribed events that have occurred in the last 5 years. So this is about effectively consumer protection and enabling clients just to undertake that due diligence themselves should they wish to do so. Now, these prescribed events include matters relating to solvency of the tax practitioner, conviction for serious tax offences, conviction for fraud or dishonesty, serving or being sentenced to 6 months or greater imprisonment, sanction or an order relating to promoting or engaging in tax avoidance and evasion schemes, an order for promoting a scheme, or a federal court order, as well as conditions on registrations. All very pertinent to ensuring that clients can make an appropriate decision about engaging a tax practitioner. So you can see there that they're pretty specific. The other stuff around rights and obligations is quite generic. And the TPB has a fact sheet that I'll link in a second, if not on this slide, the next one, that you can include as an addendum or an attachment to your engagement letter. And there's a number of ways that you can convey that information to your clients. What's important is that it's not just to your current clients, it's current and prospective. So even if you have an initial meeting with a client to talk about a potential client, to talk about services that you may provide, you should provide this information at a point in time. If you have worked with a client but have not worked with them for a period of time, then they would also be considered a prospective client. All right. So in terms of this disclosure, it needs to be made clearly, prominently, and unambiguously. I knew I'd get stuck on that one. Must be disclosed upon engagement or re-engagement of a client. So if you haven't updated your engagement letters and communicated with your clients in a while, this is a good reason to either get them in place or to update them, or upon receiving a relevant request. For an existing client, if you have been dealing with them for a while and you only just recently issued an engagement letter, you do still need to keep up to date. If a prescribed event occurs, you don't wait until the next issuance of an engagement letter. You need to keep them up to date of prescribed events within 30 days. And as you can see, based on the list of prescribed events, they're a big deal. And so you will know if one happens. So an example of how you can disclose this information, because I've just seen out of the corner of my eye some questions about how to relay this information, and hopefully this answers a lot of them. So an example that the TPB has provided in one of their information sheets is you could be considered to have kept your client informed if you publish this information on your website, if you have one. If you don't have one, you don't have to run out and put together a website just to display this information. If you include this information in your letters of engagement or re-engagement, and if you provide clients with a copy of the TPB fact sheet on, again, on engagement or re-engagement. So I did see some questions about, well, if I have the fact sheet, do I need to take it out of my terms? I don't think it would hurt to have it in your terms and then provide a link to the TPP's fact sheet as well. I think just to make sure, as coming back, that it needs to be clear, prominent, and ambiguous. You just want to make sure that the client, and just merely providing a link or something tucked away, I don't think would satisfy those requirements. I probably err on the side of caution and make sure that that's, absolutely clear that they can access that information. So we've covered a bit of background. If you want more detail, we do have a session that we covered a lot of sort of examples. And here, I'll pop it in the chat if you want to check it out. I think it's available on the subscriber platform, but I put it there in case we've got some subscribers here today. So this is a bit of a roundup and a recap on what we've talked about and how to get it into documentation. As I said at the beginning of the session, ultimately the obligation to comply with the code rests with the tax practitioner. But the reality is that other members of the practice will be at the coalface and also need to be equipped, trained, and supported to keep an eye out for these items. So let's have a look. This is going to impact, yes, it will impact your practice, but not in a drastic way. We don't expect that these breaches and false and misleading statements are going to happen every week. What's our weekly breach? What's our weekly false and misleading statement? It's not about having you guys act as investigators. It's about ensuring that your systems are set up to pick up these incidents should they occur. All right? So it will affect how you onboard and train and engage your people. It will impact how you communicate with clients, and it will impact your quality management systems. So what I've done with these slides is at the bottom, you'll see links to the relevant code items or TASA legislative items will have an impact on this area. I'm starting and I'm ending with quality management systems because that sort of top and tails really how we encompass and I guess ensure that we're keeping an eye out for these items. So quality management systems and policies are an existing requirement under APES 320 and ASQM1 already. So the CANZ, the IPA and CPA Australia all have templates which I have linked in this slide. You may already have something in place, which you could start from that and you could check with these links to make sure it's up to date. The time of preparing these slides, the status of whether or not each of these bodies has updated their templates for the TASA requirements varies. I don't have logins for all of them. I have logins for one of them. So you'll just need to check and satisfy based on the sort of blurb under each of those downloads that you're satisfied with that. But at the end of the day, it is, whether we like it or not, ultimately our responsibility as tax agents to satisfy ourselves that we have met these requirements. So you'd be wise to get it and go across and check and tick off that all of these are in play. So what that would include, so once you've got your template or your existing system or your existing documentation in place, you want to check your hiring protocols, include the requirement or the prompt or the step to search the TPB public register for disqualified entities, number one. Number two, you want confirmation that an entity has not had a disqualifying event occur in the last 5 years. And that is in direct compliance with code items 15 and 16 about not employing or using the services of a disqualified entity without permission from the TPB. So that's directly how you can address that requirement because the wording of those items says ought to know or ought reasonably to know. And I think these would be very reasonable steps for you to take to make those checks yourself to satisfy yourself that you're not engaging with a disqualified entity. With regards to police checks and proof of identity checks, there is an express legislative requirement that you do this. However, the code item upholding ethical standards in the profession does have this as a potential way of taking steps to ensure that you are having staff members who will uphold ethical standards in the tax profession. So this would also be common hiring practice or good business practice in terms of when you are bringing on board people into your practice. This is not limited to employees. So this can include, as I said before, associates, contractors, entities, right? We talk about entities as well. So just making sure that you have this breadth in your quality management systems when you're bringing on anyone into your practice in any capacity, conducting these checks. All right, in terms of contracts, it would be prudent, and this is not you must have, but when we come down to the wording of ought reasonably to know, to the extent you can build this into your existing processes and systems, you're going to make your life easier and you can give yourself that assurance that you have taken those measures. So having in your contracts an agreement that and I'll use the word people or staff, but when I do that, please know, I mean individuals, associates, contractors, subcontractors, companies, all right? So I'll use that word, but you know that I mean everyone. Need to provide notification of any disqualifying event once they've commenced working with you. There's that ongoing obligation, contractual obligation to let you know, and that they won't provide any services on behalf of you as a practitioner if they are or if they become a disqualified entity. So it's just doubling down on promise, pinky promise, like double pinky promise. And that can be unless or until TPB approval is granted. Okay, so I've linked that there as well in the bottom of those slides. In terms of onboarding and ongoing training, it's one thing to have that in the initial sort of contracts and the setup. But again, as I mentioned earlier in the session, the obligation to comply with the code ultimately rests with the tax practitioner or the registered tax practitioner. But we want our staff, registered or not, to be able to be our eyes so they can give us confidence that the system, the practice itself and our operations are able to pick up on any matters that could potentially be in breach of the code. So that would include ongoing training about the Tax Agent Services Act, the Code of Conduct, and requirements pertaining to the code and the TASA. And how to deal with a false or misleading statement if it's identified. You can't really have, and the TPD doesn't want unregistered employees reporting to them. It's the practitioner that has that responsibility. So there needs to be a way within the practice for unregistered or junior staff to be able to feel confident to flag it to senior staff and say, hey, I've seen this, it doesn't sound right, what do I do? So you need to have that ongoing training. They need to feel empowered that they are doing the right thing in raising these matters and who and how they should be dealing with it, not to necessarily go to the client. Do we need to discuss it internally and determine what information we have on file, etc. Keeping up with CPD. Now, this is an important one. It ticks off on a number of items. So, for example, ensuring that services are provided competently. That was one of the code items. And it's not that you need to make sure that every member of your practice is like a tax whiz or you've got every area locked down. It's about having sufficient skills and knowledge in the areas that they operate in. So that would include CPD in your particular area of specialty, as well as your ethics training, as well as I mentioned, how to identify a false or misleading statement, because ultimately the tax practitioner has that responsibility. We need to make sure that we can pick that up. And also, as you'll see over the slides, breach reporting as well. So, and this is one of the concerns that came out of the government leaks matter. And in terms of sanctions, it was a concern that the firm didn't have sort of policy and protections or wasn't really clearly communicated to staff about those whistleblowing protections, about a breach report policy and the firm's policy with regards to staff making these types of reports. As well as guidance and performance management to ensure that your staff actually uphold the code. Right, so you want to make sure that you're operating as a well-oiled machine and that you are not, in terms of keeping out for false and misleading statements and breach reports, that you don't inadvertently breach the code yourself. So you want to make sure that all those systems and that ongoing training is in place. In terms of communication with clients, we want to make sure, as one of the code items, as I've linked down there, keeping proper client records. You have records in place. Now, this is already aligned with engagement documentation in H320, and I'm sure you guys are doing it already. But for the avoidance of doubt, it needs to be in English, readily convertible to English, needs to be retained for 5 years, needs to show the basis for decisions that were made in the provision of tax advice. So, for example, that would extend to if you're taking something from the ATO website, maybe take a screenshot as opposed to a link, because you know those things can change. So sort of contemporary documentation of basis for your conclusions in the provision of tax advice. You have a phone call, file note it, those sorts of things. So just documenting that correspondence. In terms of keeping clients informed, you want to let your clients know how to access the register, how to make a complaint, what are their rights and obligations. All of this information is included in a TPB fact sheet, which I'm hoping to share with you in a second. Where's that link? Anyway, it's embedded in the slide, so you can access that. I'll grab it later. Or a prescribed event within 5 years. Okay. Engagement letters and client acceptance. Engagement letters are not necessarily a specific requirement of the code or not even a mandatory requirement necessarily from the TPB itself, but they do still have a guidance sheet, which I've linked under engagement letters, in terms of engagement letters being a great vehicle for keeping clients informed. So, that can be one way. There's many acceptable formats in terms of keeping clients informed, but certainly an engagement letter would be great because it also gives you the opportunity to agree scope, fee, timelines, who you're servicing, and probably a way to ensure compliance with the code overall because you've got that checkpoint with your clients and an opportunity for them to keep you informed as well about anything that's been changing in the business. Okay, so quality management systems, as I've mentioned before, and I've touched on this, steps to take in the event of a reportable breach, following on from the false and misleading statements. So making sure staff understand that they can raise matters, that they have protections available to them, and how and who they could raise that with. And if you think about the fact that the breach reporting obligations were in direct response to the government leaks matter, had these measures been in place, matters may not have gone to the extent they did or been uncovered much earlier, or even, and this is talked about in the information sheets, the culture of, the practice would have been such that things may never have got to the stage they did. Actions required in the event of false or misleading statement or breach report. And what I've added here is not only actions to take in the event of a breach reporting incident or a false or misleading statement, but most importantly, or equally important, is to document even if you decide not to report. Because if, as some of the questions in the chat have said, or have asked, well, what happens if we don't report, but I should have? If you are, well, the TPB says, please do err on the side of caution. But if you do feel there are no reasonable grounds, then document and document why. That documentation may be revisited if you see a frequent occurrence or reoccurrence of those type of events, in which case it may become reportable, but certainly to document if you decide not to will protect you in terms of your obligations under the code. In terms of quality management systems, continuing on, as I said, the tax agent is ultimately responsible. So this does extend not only to the unregistered or registered staff in your practice, but those off-site, whether it be remote working or offshore or outsourcing arrangements. So understand in terms of, check-ins, training, how are you going to review the files? Do the offshore supervisors have the appropriate training as well? And making sure that you have an extension of your policies and systems to make sure the work that we create or contribute to is also in accordance with the code. In terms of dealings with the government agencies, again, not going to be super relevant unless you are involved in direct work or consultation, but important to have a prompt to consider it should an engagement of that nature arise. And that brings us to the end. I was just ready to go on the same note. But in short, guys, have your existing policies. Okay, in these slides, these last sort of 10 slides, I've linked each of the requirements and you can open that up. You can check the mapping and tick off on those items. Do I have something that addresses hiring, disqualified entities, police checks, identity checks, ongoing training, etc. And you can work through and map that to your existing policies and procedures. Furthermore, the TPB has said it's going to look very different for a big firm versus a sole trader. It's also going to look very different for a small practice. So they're not expecting a huge machine, it's going to be relevant to what works for your practice. Thanks, guys. Thanks,
Awesome.
Vicky.
Yay. So we've got a few minutes left. I have picked 10 questions that I was keeping a lookout for in the chat and also in the Q&A. So we'll get to those shortly. Assistant Nugget also dropped a link in the chat to the slide pack as well. Last chance for you to get it if you haven't already. So moving on to some Q&A, we've also popped up the feedback poll for today's session. So you can give us a rating. You can also put any suggestions for next topics. If you really want Tanya to just sit here and answer questions nonstop, we can also organize an AMA session. So that's an Ask Me Anything session for our Nuggeteers. So just let me know. And if there's a lot of demand for it, I'll definitely go ahead and organize that. So we'll just run through the 10 questions that I've picked through just in the interest of time, because I saw there were heaps going in the chat and in the Q&A box. So otherwise, we'll be sitting here for another hour. Cool. First question, and I've kind of organized it in the different changes, I guess. First one's about breach reporting. Do you have to report breaches to your professional body or the body of the offending practitioner?
Yeah. So back, I mentioned I didn't actually expand on it, but I said the RPA. So yeah, there's a list on the information sheet, about 11, I think. If to the extent you have the information, you don't have to go in and stalk them and try to figure out who you're registered with, that you could do a quick search on the register if they're listed. Yes, you absolutely do have a requirement to report and take any further action, which would be in the public interest. So.
Cool. Yep. Next question is about disqualified entities. Very interesting one. So if you have a disqualified entity that is referring clients to another firm for a fee, does that count as services provided under these changes?
Yes, well, Code Item 16 actually refers to services in connection with, and it's quite a broad net. So I think that is sounding very much in the zone of in connection with. And I don't think that would circumvent a breach of that item.
Nice try. Maybe a creative arrangement, but nah. Cool. Next questions are about false and misleading statements. So if we have become aware of something that is false and misleading prior to the 1st of July 2025, are we still required to report it?
So in terms of false and misleading, it's false and misleading statements after 1 July 2025, not to be confused with breach reporting, which is 1 July 2024. So yes, it's only to the extent that that statement was made after 1 July 2025.
Cool. Good. Thank you. Very clear answer as well. I think a lot of people are getting some of the dates confused about what's in, what's not.
I should just add to that, depending on the size of your firm, because we do have the 1 Jan 2025 start date for the larger firms. So depending on your start date.
Cool. Ooh. Is there any materiality threshold on a false or misleading statement?
There is no materiality threshold. There's materiality concepts in terms of the frequency, those impacted. Material would not be insignificant or trivial. So that's what it's not. Yeah. But yeah, it looks at the nature and it's not just on a qualitative threshold. There's a number of other factors that sort of show, is it likely to continue, the number of clients, sort of the intent or the total disregard for the law and, the factors that we listed earlier. So no materiality dollar value threshold as such, no.
Okay, cool. Next ones are on reporting a client, dobbing one of your clients in, maybe. Do the potential consequences include letting them know that you have a duty to report them to the TPB if they do something naughty?
Yeah, so in terms of our obligations, I think definitely that's listed under the false or misleading sort of steps. You need to, I think it would definitely be, I'll just bring that up as well, absolutely, to let them know that you need to correct it. And I think being as transparent as possible. Furthermore, in obligations with our clients in terms of keeping them informed, the section on obligations of clients and the tax practitioner would be important. And I'm just going to try to find that information sheet and put it in the chat for everyone as well, because I had that link ready to go, but it disappeared. But that would definitely cover off on sort of bringing clients up to speed on in terms of what obligations are for tax practitioners.
Yeah, we'll see if you can find that.
Yeah. Yep. And I'll do it this time without losing the clicker.
I mean, there's nothing else to click, so you can use that one.
Now's a good time for me to break things. All right, so that should work.
Cool. Yep. So, thank you very much for that one. All right, next one about reporting a client. What about transmittal letters? So if we say this is like the letter in the front of your tax return that you send out along with tax return for signing, where we disclaim that we have not looked at certain aspects, does that count as an omission?
I'm just trying to get a bit more of a handle on that question. Do you mind repeating that?
Let me try and find, I think this one was something in the chat. That one was not in the chat. That was not in Q&A. It was somewhere in the chat. So what about transmittal letters where we disclaim that we have not looked at something in particular? Does that count as an omission?
The transmittal letter is to the client.
Assume so, yeah.
Okay. So in terms of false or misleading statements, it would be a false or misleading statement or an omission made to the ATO or the TPB. So it's to the extent you've made that statement to a government body, i.e. the ATO or the Tax Practitioners Board, and that statement is false or misleading or contains or doesn't contain an omission, contains an omission, as opposed to the transmittal letter. That would probably be more a scoping discussion with you and your client and the clarity of communication with your clients and expectations, but that wouldn't fall under the false and misleading code requirement.
Cool. All right, next question, last one on reporting a client. How do you explain or give examples to provide context regarding the term substantial harm? There's a lot of kind of like vibey terms, I think, with all these changes. It's like, I think Matthew was the one who sent this question, and this is a key term that forces a tax agent's hand in terms of reporting a client. So where do you kind of draw the line and how do you communicate that to a client?
Yeah. So in terms of substantial harm, it can be to investors, creditors, employees, or to the public. And that could mean, and that could also include, whether or not there's been any, breach or undermining of the tax system, whether or not there's likely to be a broader implication across a range of clients if it relates to entitlements for an employee, if it's to cause damage to reputation or good standing. So it is quite broad. And a lot of the examples that we've seen or that are in the information sheets, it's not big dollar amounts. It can definitely go to the quantum or the regularity or the recurrence of items.
Yeah. Awesome. Next one kind of ties off that one, and also it's about keeping clients informed. So I've got a few questions that were asking the same thing about engagement letters. So do people have to send out re-engagement letters by the 1st of July 2025, even for existing clients, or can we just re-engage clients when we do the tax return with the new terms and the fact sheet and everything else?
I think you definitely want to keep them up to date, even if it's not by way of engagement letter. It could be by an email, mail out on your website, but definitely upon or before the commencement of services. So as you have clients rolling through, that would be the point where you want to make sure that you have informed them. And I think it would be great to, have that touch point where you're confirming the scope of services, and in that communication, including the details of what you need to keep them informed on. I think it's not just like a once-off. You want to, because the touch point needs to be regular. Not that this will be the case for those in the room, but should you have any of those prescribed events, you want to make sure they're notified within 30 days or 30 days of a prescribed event. But certainly that prior to the commencement of services.
Yeah. I actually think like a little email blast, maybe 30 June, 1st of July could be a good idea, just for like general information, just keep them all updated on stuff. But yeah, it sounds very tedious if you would have had to create new engagement letters for every single person, even
I think
like ones that just signed recently.
Yeah, and it can be an addendum to the engagement letter, like an attachment or an update. as well. So just making sure that you've clearly communicated that information. It doesn't have to be in the form.
Yeah. Awesome. All right. 2 quick questions to wrap up about quality management systems. First one is for a sole practitioner, these quality management systems and policies, how relevant are they to running a practice?
They are very relevant, just not to the size and scale that it would be for a 100+ employee firm. So it needs to be tailored to what would work for a firm of your size. It does need to touch off on these items. And it's not going to be, hours and hours of training for everyone every week and check in. It's going to be having your system have these prompts and these reminders and these triggers to make sure if someone's on board, what's the contract? What are the checks in place? If we're conducting this work, do we have staff who are equipped and trained and have the appropriate qualifications? Do staff know which client records to keep? So even if it's a small practice, when we're bringing someone on, making sure that they have a point of reference to understand what's expected of them. So documentation, the basis for conclusions, in English or readily convertible to English, the retention period. And also, of course, making sure that they are equipped to understand how to identify and deal with a potential false or misleading statement, policy on breach reporting. So that need be like a big binder. It can be the template that you get from your membership body. And you go through it and satisfy yourself that all of those items that we've discussed today are addressed. So it is still relevant. I think all tax practitioners, regardless of size, I'm sorry, but it is a requirement. Yeah.
Yeah. Like Deb just said as a comment, it's like, oh, just one staff. It's not like just one person. It's no staff. It seems a bit of overkill. But did you say that some of the professional bodies have templates that you could just use as well, which would help a lot? You can custom it as well. All right, very last question today about quality management systems. So if you have template checklists or work papers that you use in your practice, do you need to include those like one by one as part of the quality management system? Or can you just say, oh, there's like a library of templates that we use for certain aspects of the practice?
So you're saying you make sure you check everyone off for the engagement?
Or maybe you have to like include it in the system.
Oh, okay. Well, maybe a way would be at the planning stage, you decide on which ones would be relevant. Is that what you're saying? Like, does it have to be a full check for every engagement or
do you have to include all the templates and work papers and checklists that you use as part of your quality management system?
I think to the extent...
Can you just say like, we use these work papers to check that we have considered all issues and matters.
If it's electronic and you have a link to the library and you're referring to the repository for those, I think that would be, and staff have a way of accessing it. They know where to find it. I think would be just as efficient. You wouldn't want to have like a quality management system that includes, and here's the legislation and here's, so I think, it's a mapping system that will allow staff to do what they need to do and find what they need to work with. That sounds pretty reasonable. And there's no prescriptive requirement that it has to include the technical detail. It's more the mechanism for ensuring that the work is produced to that level of quality and in accordance with the code. So there's no, I haven't seen anything that says must include every single checklist.
Cool. Awesome. So I'll wrap up the questions there. We do have quite a lot left over in the Q&A, but we'll see what people have requested because their request is my command in terms of scheduling events. So Tanya, just to wrap it today, one key takeaway from today's session.
It's here. The changes are here. However, just keep in mind, you guys are attending training. You're doing the right thing. And it's not about you going back and being an investigator and fixing everything that's ever happened. Have a conversation with your clients. If you do come across something that you have to fix from another accountant, I've just seen, it's a discussion around fees and how you work with them. But really, if you are here and you are focusing on doing the right thing, I think the chances of you being caught under these rules is going to be highly unlikely. Yes, there's a bit of admin to get yourself sorted and set up, but that comes with the territory. And hopefully you have a bit of a game plan and there's some resources here that you can get started with.
Yeah. So for those people who see it as a bit daunting at the start, hopefully after our 1 hour discussion, and Tanya has put in links to a lot of practical resources and kind of a guide of what you really need to do. So hopefully the admin work doesn't seem too overwhelming and you are able to get it all done. Just sit down a couple of hours, just, yep, sort it all out by 30 June in time for the 1st of July. So thanks so much, Tanya, for sharing your expertise today. Thanks everyone for joining in, for all your amazing questions. It was a lot of fun going through all of it today with you all. And I guess we'll see you next time, hopefully at another Nuggeteer event or at the next live event. That's a freebie. Awesome. Thanks again, Tanya. Thanks, everyone.
Thank
See
you,
ya.
everyone. Thanks, Vicky.